Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Tesla. Can Tesla keep outbeating its competition and crazy valuation models? And is it still currently a buy after the Hertz deal was just announced? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Tesla designs, develops, manufactures, sells, and leases electric vehicles and energy generation and storage systems, and offers services related to its sustainable energy products. Now, the company segments include automotive and energy generation and storage. The automotive segment includes the design, development, manufacture, sales, and leasing of electric vehicles, as well as the sales of automotive regulatory credits. Now, the energy generation and storage segment include the design, manufacture, installation, sales, leasing of solar energy systems, and energy storage products. Services related to its products and sales of solar energy system incentives. Now, its automotive products include the Model 3, the Model Y, the Model S, and the Model X. The Model 3 is a four-door sedan. The Model Y is a sport utility vehicle built on the Model 3 platform. The Model S is a four-door sedan, and the Model X is an SUV. Now, the company's energy storage products include the Powerwall, the Power Pack, and the Mega Pack. Now, let's go look at some of the news that's this company right now that send it through the moon. Tesla hits the $1 trillion market capitalization for the first time after Hertz says it will buy 100,000 vehicles. Now, this is great news for Tesla. One thing I also wanted to discuss is why did Hertz choose Teslas and not any other of the auto manufacturers for their electric vehicles? And I'll get into that. So this brings me up to the second news article that I disagree with, and I'll explain why. So this article comes from CNBC. And regarding that Americans are buying Teslas and not electric vehicles, but those experts are saying that the traditional automakers will outpace Tesla when they throw all their EVs on the market by 2025. So let's discuss Hertz. Now, Hertz knows Tesla has infrastructure of charging stations across the entire country, making it seamless for a consumer to drive as far as they like and not worry about how the heck are we going to charge this thing, right? So the premise of this article is saying, again, build it and they will come, but forget completely about the novelty aspect without the foundational charging infrastructure. And I've been saying this from day one. All the other automakers could eat Tesla's lunch if they all ganged up on Tesla, have a universal charging stations across the United States for all of them to use together. Now, in addition, for instance, I usually travel in Florida 200 to 500 miles between cities a lot, and I wouldn't trust some random charging port at a mall that may or may not charge my novelty EV when I'm trying to go to see family 500 miles away. Now, if news came out that big auto manufacturers doing a joint venture regarding charging stations throughout the United States, then Tesla stock might flounder on some of that news, but that would take years to build out, so only time will tell on that, and there's been no news on that. So I personally do not own a Tesla. I'm a Beamer kind of guy, but if I were to buy an electric vehicle, it would be a Tesla and not a novelty product from one of the big auto manufacturing companies. Now, my next car purchase or truck purchase will be probably a Ford F-350 dually that can tow up to 20 to 30,000 pounds. Now, I basically need to tow about a 15,000 pound boat, fishing catamaran around the state of Florida. Now, if Tesla, by the way, creates a truck that can compete with that and that can tow that capability, my next purchase would be a Tesla and not a big Ford truck. But I don't see that happening anytime soon. But I would like to see that in Tesla's future because they are doing the semi. So time will tell on that. So let's go ahead and look at some of the fundamentals of the company right now. Now, the current stock price is a mind-blowing $1,016 a share with a market capitalization of $1 trillion. Revenue for 2021 is estimated to be around $50 billion with about $4.89 billion in earnings. Now, forecasted revenues by 2023 are about $86 billion with earnings approximately $10 billion. So Tesla has high growth earnings forecasted over the next 3 years, and they are high quality earnings as well. Now, Tesla's short-term assets exceed both its short-term liabilities of $18 billion and its long-term liabilities of $11.3 billion. So let's go ahead and look at some of the valuation analysis and profitability analysis. Look at the valuation analysis because Tesla is in the automobiles industry and has positive earnings. The PEG and PE and the price to book ratios are the most appropriate valuation measures. Now, the price to sales ratio is less instructive than than the PEG or PE since the company has positive earnings. Therefore, Tesla seems highly valued with the highest PEG value in the automobiles industry of 4.55 times, which is supported by a PE ratio of 332 times. That is also the highest in the industry. Now, looking at the profitability analysis, based on its operating gross and net margins, Tesla converts an above average median percentage of its revenues to profits compared to other companies in the automobiles industry. Furthermore, the company is profitable with an operating margin of about 9.57%. Now, looking at the growth rates analysis, earnings growth at Tesla outpaced revenue growth over the trailing 12 months. Now, this is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than that of the average company in the automobiles industry. And looking at the financial strength analysis, has total capital ratio of 22%, which is in line with the automobiles industry's norm, with an interest coverage ratio of 16.57 times and a quick ratio of 1.1 times. The company should be able to comfortably repay its debt, and I agree with that. So I'm going to bring it back over here. So what do the analysts say about this? So the analyst consensus is a hold, with 12 saying buy, 8 saying hold, and 7 saying sell. The analyst price targets is a high of $1,200 a share, with the low end of $150 a share. I don't know who that guy is. And the average saying about $781 a share. Now, going over the few of the analyst reports, the street quant ratings see Tesla as a buy, and this is driven by several positive factors which they believe should have a greater impact than any weaknesses and should give investors a better performance opportunity than most stocks that they cover. Now, the company's strengths can be seen in multiple areas, such as its robust revenue growth, impressive record of earnings per share growth, compelling growth in net income, solid stock performance, and largely solid financial position with reasonable debt levels by most measures. We feel its strengths outweigh the fact that the company shows low profit margins. Now, the Ford Equity Research also has a buy recommendation on that, and they see as a result of their systematic analysis of the 3 basic characteristics that they look at, which is earnings strength, the relative valuation, and recent stock price movement. Now, New Constructs recommends investors avoid Tesla and say that the stock has more downside risk than upside potential. Now, their basic report, the New Constructs report, is a fundamental analysis, but this stock is disconnected from the fundamentals and always has been. I don't see that changing anytime soon in the near future, over the next year or two. So am I a buy, hold, or sell recommendation on Tesla? Here are my thoughts. Now, 10 months ago, I did this stock, so check out that video above when it was trading at $650 a share. I recommended at the time a hold the stock, but there would be some volatility in early 2021 and to stay for the long position. It was volatile back then, and it went down from 650 to 600 over the next couple months, but it gradually rose back up and it headed that upward trend. Right now, I am a long-term bull on Tesla, but with some points of caution here. I would sell the news and buy the dip and play those option calls that we all love to do right now. I have the target share price of about $1,200 a share over the next year. I know that the PE ratio is extremely high with Tesla, but I only see the sky's the limit for the company, literally, with him, and I don't see them slowing down anytime soon. Normally, when I see PE ratios high, I fundamentally, I recommend it's overpriced and stay away from it. But every investor knows Tesla is way overpriced, and the stock price already is priced in future revenues and earnings. But I don't see any investor sentiment swaying away from Tesla at all. I see more volatility and higher swings up and down. And for some investors that can't stomach that volatility, they should be wary of this stock. Now, just looking at the gross margins of 30%, that is 3 times the gross margin levels at GM and about 6 times the gross level margins of Ford. For short-term investors out there, I see a dip coming soon with a few quick bucks to make when the news subsides. Look at the options play on this one as well. When I mean dip, there could be a pullback to about 900 and possibly see a resistance at 850. Not today. I'm not talking about today or the very, very near term, but I'm predicting sometime like that in the near future. Over the next few months, there's probably going to be a slight pullback, a correction, and then more upswings in the future. I believe that the supply chain issues are over. When they're over with, I think Tesla will continue to outperform the market overall. Now, I see the electric vehicle industry is at the beginning of what will be a multi-decade growth bonanza for electric vehicles around the world, and Tesla is at the forefront of that growth. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.